Hey guys, how you doing? I'm your host, Nate Barger here. Make sure that you check me out on YouTube. Hit the like button, subscribe to us, and if you want to be notified on how to become wealthy in this next 10 years and retire early, make sure you click on the bell. So today I get a lot of questions. What's better, real estate or the stock market? So I'd pull up a little bit of data on, this is off of wealthsimple.com. And just so you guys know, I am a real estate investor. I am not a financial advisor. So this is for entertainment purposes only. Sorry, I got to say that. So the S&P 500 since 1896 has returned 5.42%. Since January 6, 2012, it had an average annual return of 7.55. For the 91 years prior to 1987, the average annual return was 4.3. So people say, what kind of return are you getting in real estate? Man, we get crazy returns, guys. And I want to show you how to do it too. I had a good friend of mine on the other day coming up with a program to show you exactly how to do what I showed him how to do. He bought his first property in November of 15. I was going to Florida at the time, and him and his buddy Tyler asked me to mentor them, show them how to do real estate. Keep in mind, guys, I went bankrupt in 2013. I finalized my bankruptcy in June of 2013. By the end of 2015, I had enough passive income to retire. So I'm going to show you how I was able to do that really quick, really fast, and show you how you too can become a multi-millionaire in 5 short years, just like I showed Jarius. So Jarius came over the other day. November of 15 was his first property he bought. He had $3.6 million worth of property. He owed $2 million on, and he had $15,000 a month in cash flow. I'll show you exactly how to do the same thing that he did. So real estate, we already talked about the returns. Now watch this. If I go buy a property, the difference is I can go to the bank and get leverage on my real estate. Also, my real estate is tangible. I don't have to worry about it collapsing and going to zero. As long as you're buying in the right areas, and I got plenty of videos on YouTube. I'll more than gladly answer a lot of questions, but a lot of people that are asking questions that you should already know if you watch my YouTube videos. I'm giving this stuff away to you for free. So don't know everything about sports and the Super Bowl and all the statistics, but not know anything about properties and want to invest. I'm giving this information away for free. It's information that you would pay well over $100,000 to learn and would take you years. And I'm breaking it down in the simplest form. Go on YouTube, Nate Barger, and again, make sure you subscribe to us and hit the bell over there. You'll get notifications every time we drop a new video. So, real estate. Let's say I go to the bank. The bank says, yes, $100,000 property. I'm buying a property in an area that's appreciating 5% a year. That's all over the country right now. You're actually seeing 10, 15%. I just got a message from somebody the other day, yesterday actually, last night I got a response to him. He thinks that he's getting 20% on his property so he doesn't have to make any cash flow. Cash flow is great, but let me tell you, 20% returns cannot stay. Because if you do, then $500,000 property will be $1 million property in 3.5 years, and you can't support that. What I mean is that you need wage increase, drastic wage increase for people to be able to afford that, or you need interest rates to drop so that people can afford more. We know that interest rates cannot drop much more at all. So what are we looking for in the coming ages? I'm going to do about 10 videos on this because I want you to know all about inflation, how you can benefit from that, how you can become wealthy. It's just like riding a wave. You're going to get on the bottom of this wave. You're just going to ride it all the way up. You're going to become very, very wealthy if you do what I tell you to do. So you buy a property, bank, $100,000 property. The bank says, hey, I'll give you, and I'm just using 100,000. It could be $1 million, whatever, double it, 200,000. So 5% appreciation a year. You're putting up 20 grand, right? You're getting the appreciation on the whole 100,000, but you're only putting up 20% of the capital, which means your 5% is actually 5 times 5. So you're getting 25% on your money. So 5% of 100,000 is what, guys? There you go, right there. See that? Now, if you take 25, if you take $20,000 and you divide it by 5, that's a 25% return. That's just appreciation. You're getting 25% a year. I just told you what the stock market gets. We haven't even calculated the cash flow. Let's calculate the cash flow. Let's say you're getting a 7% return on the project. Let's say you're borrowing the money from the bank at 3.5. That means you're getting 7% on the 20% you put down. You're getting 3.5 times 20, 40, 60, 80 that the bank's putting up. So 3.5 times 4 is 14, plus your 7% is 21%. Is that right? Yes, 21% plus 25%. Getting 46% return. That's how we created so much wealth, because we understood what the end goal was. And what I showed Jarius to do, he did it, and he did an exceptional job, and he bought in the right area. November of 15, guys, that was a little over 5 years ago. And today, he never has to work again if he doesn't want to, because he has $15,000 a month in passive income. He bought in an area that's appreciating by 14% a year, which again, guys, that's not sustainable. But for right now, that's what he's getting. So that means on his $3.6 million, he's making $1,400 every time he goes to sleep, wakes up, goes to sleep, wakes up. It's just happening every night. That's why I want you to understand areas, what areas to buy in, what areas you actually have in your portfolio, which ones you actually want to sell. And then I'm not a stock expert. I don't know a lot about stocks, but I do know that the price to earning ratios are way out of whack, that money is flowing into the markets right now because bonds aren't paying anything. So all the money that people used to keep in bonds aren't paying anything. They pull their money out of bonds. They're looking for yield in real estate. They're looking for asset preservation. A lot of people think that the dollar is not going to last long. I could do a whole video and tell you about how the dollars work. And I probably will, about how the U.S. Treasury works with the Federal Reserve, and how the Federal Reserve is not owned by the federal government. And I don't want to hear it's not a conspiracy, guys, because before we had that, we had to hunt and gather or trade and barter. And so I like this system better. I think it's a great system. It's not backed by gold anymore, but last year in 2020, the government was responsible for 57% of all the business transactions. So we're becoming a little bit way more dependent on the government. Back before, it was on the gold standard in the early 70s, only 4% of it was because of the government. That meant that people were working to drive and make money. So what should you be looking for? You should be looking for rapid inflation, especially if the government comes out and gives everybody $15 an hour like they say they're going to. Come on, guys, I'm giving you this information because I want you to become wealthy. We are putting together a program right now that is going to show you step by step. We're going to have spreadsheets, and then we'll even put a live seminar together at one of our hotels that we own because we did the BRRRR method. Started in 2005, and all I did was start buying single family homes. And by 2010, I was up to 250 units. I had industrial buildings, and I was on the verge of bankruptcy. And I did go bankrupt, and I lost everything. But the knowledge that I had, they did not take from me. And that's why I want to share it with you, because it's so powerful. How is it that somebody with no education, self-educated, didn't go to very good school at all? Actually, I went to prison. I went to military school. All odds against me. But yet I succeeded because I'm a numbers guy, number one. And number two, I focused on the goal, which is something I'm going to tell you guys over and over and over. Once I sit down with you and show you guys how to get this goal put together, I want you to focus on the goal and not the circumstances. The circumstances always, it's hard. I got to wake up early. I got to work late. Doesn't matter. This is where you're getting to, because once you get here, then you don't have to wake up early anymore. You don't even have to wake up. You don't have to worry about when you go to sleep. You don't have to worry about, look at this, it's snowing out here. It's terrible. My wife said, let's go to Florida. I said, book it, let's go. Kids got caught off snow today. I think we got, I don't even know how much, man. My son is out there shoveling. Now he wants to negotiate with me. How much snow do we get?
4 inches.
Huh?
It said to be 4 inches.
No, how much snow do we get dollar-wise? How much you going to charge me to shovel the snow?
Much?
Yeah.
45.
45? We did not get $45 worth of snow. We got $25 worth of snow. Yeah.
35.
$30 worth of snow is what we got.
Inflation, Dad, remember?
Yeah, inflation hasn't started kicking in yet. It's going to kick in this spring after the snow's gone. 35, and that's my final offer. Okay?
Yeah, my plan was to take 45, so you get 35 left.
That's great. So, guys, another reason why I love real estate is because with stocks, you almost feel compelled to panic and fire sell. With real estate, it's different. You know, people were like, well, what if the value goes down? I said, I don't care, I'm renting it. The rent's not going to go down because what happens in a rental market, even in the last rental market in Cincinnati, they said that the market went to 89% occupancy, but rents actually went up. You know how I know? Because I was buying in that market, and even though it may have went to 89% occupancy, that was because you had a lot of people that walked away from their properties and the occupancy went to 0 or 20%. That skewed the number. So the good operators, and I was a good operator back then, we were running 95% occupancy and we were pushing rents. So we were able to come in and buy a place and push rents from 500 to 650 just by doing a slight renovation because there was less inventory out there. There were less people that were even renting. They walked away. The banks were in control. Receivers were in control. And nobody was renting these properties out. So even though our occupancy theoretically dropped, the amount of people that were looking to rent actually increased drastically. You had homeowners losing their home. And so I'm not afraid to own real estate like I am stock because stock could drop and go to 0 and never come back. Real estate's going to be there. You have to know where the basic jobs are. You have to know, and almost every video that I've done an analysis on, and I start to see new builds drop, I say, what happened in the 90s? I escalated that yesterday. What happened in the 90s? Something happened. Oh, well, we had this steel mill closed down. Or, oh, we had this, what was the other one? It was a pulp, a place that produced paper. They left. And when them people leave, all them jobs leave. And there's no reason for people to be there anymore. We had the same thing in Norwood, Ohio, happened back in the 80s. You had a thriving community. You had Fisher Body, which was General Motors leave, and it just devastated the whole community. It rippled effect through that, and that community did not start recovering until after 2010. It's just now making a rebound. They did get some new drivers over there. They got Paycor, which is big business. They got a little small community college. So they had to bring in basic jobs, and that's what you want to follow when you're buying real estate. Another thing about stocks is the dividends they pay, maybe not, but cash flow, especially in this time where we're going to go through rapid inflation, guys. They're going to come out. They're going to maybe give people $15 an hour. That means that people will be able to afford more rent. That means that people will pay more because of supply and demand. So I want you guys in 5 years from now, I'm going to be working over the next 3 or 4 months to release a module, a class that you guys can come in. I'm going to put it together step by step. We're going to give you guys all the resources. We're going to give you guys the discounts that we get at the paint stores, at Home Depot, at Lowe's. We're going to negotiate with one of them vendors, the one who gives us the best price break. That's what we're going to work with. We're also going to show you guys so many secrets that took us so many years to learn. And we'll bring in experts and put together modules for everything. So you guys make sure that you follow us. If you're not a member of our group, BRRRR Invest on Facebook, make sure you go on there. We got over 42,000 members. We're growing like crazy. We got great content. We got some great people in the group. Also, our partner Adam has some great stuff over BRRRRinvest.com. Make sure you go in there. If you like his stuff, it's like 137 bucks. He gives you a bunch of different leases and contracts and stuff that he's an attorney. He wrote all this stuff. He also has a calculator for people that are just getting started in here that's good to use. So guys, make sure you check him out. And again, subscribe to our channel, Nate Barger on YouTube. Put your questions below, hit the like button and subscribe to us, hit that bell, and we will see you guys soon. Make sure you hit the like button, subscribe to our channel, Nate Barger on YouTube, and hit the bell, and you'll be notified on any new videos that